From Washington, this is the Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, April 22nd, 2022. This is Tony Fratto. You're listening to the Macrocast brought to you by Hamilton Place Strategies and Markets Policy Partners. I am in DC this week, Brendan. We're here for the IMF World Bank spring meetings held in Washington, DC in this week in April every spring. Not the annual meetings, which are held in October, 3 out of 4 times in Washington. The talk of the town, we're going to get into a little bit on how, with the world economic outlook, and maybe I'll tell you some of the chatter I've heard around town this week, what people are concerned about. But first, I want to start with what we saw here. And it was part of the IMF World Bank meetings at an event with Christine Lagarde, the head of the ECB, and Chairman Powell, leaned forcefully into the likelihood of a 50-point increase in the policy rate. I heard that Asian markets were responding to that. Is that something you're seeing?
Yeah, both Asia and Europe are down pretty big today. China, which is kind of trading on its own little world lately, was up, but the rest of Asia was down, over percent, and the same with Europe. So after Powell's speech, the 10-year jumped, 10, 12 basis points. We're getting close to 3% on the 10-year yield. Even though earnings actually have been quite good, other than Netflix this week, they haven't been enough to overcome the fears that, the Fed is going to over-tighten. Even if whether it's fears of the Fed over-tighten or just the reality, the rates are going up, the markets are having to digest higher rates and what that means for earnings. Yeah.
The thing I was most surprised about was that anybody was surprised, though. Aren't you? A week ago we were saying, 50 points is baked into the market. Everybody knows a 50 basis point raise is coming in May. Why was anybody surprised by what Powell said yesterday? I thought we all knew.
Yeah, he took it a little farther. So now the markets are pricing in not only a 50 basis point hike in May, but also another one in June and another 50 basis points in July. To that, before yesterday, it was kind of 50-50 whether the June would be 50, but people were thinking that July, then we would go back to the 25s. We'll see what happens. But yesterday was Powell's opportunity to really, it's the last time he's really going to speak before the meeting of any substantial nature. He came across apparently as more hawkish than the market was expecting.
Yeah, my sense is, we had our reception here, last night, which we do for, usually for the spring meetings, and it had a lot of, Fed watchers around, and the consensus was the view that, look, he's got to come out strong, even right. Forget about June and July. If he thinks we're going to go back to 25, he's not going to say we're going to go back to 25 or potentially nothing in future months. He's like, the whole point is to send a message to the market that to really restore credibility on their price stability mandate. And so that's what you got to do. So you don't want to undo the shock that you're trying to infuse into the markets in April and May by telling them you're going to unplug the shock machine later on. So I don't know. What do you think on June and July? Are you expecting 50?
I think it does make sense as long as the markets are willing to not freak out that they can do it in June. July just seems like a long way away from me. The world is changing daily, So my base case is you get two 50s, and then in the summertime they start going back to 25s.
That's my sense too. I'll be surprised if they if they're still increasing by 50. But look, we'll get more inflation readings by then, and I could imagine June, but I just think that they are going to get back to a point of on a more steady 25 point.
And the reality, when we talked about it a few weeks ago with the CPI, core inflation probably has peaked in March, especially now that goods inflation is coming down. Just simply, cars, used and new cars, have added 2 percentage points to the year-over-year inflation readings. That's not normal, and now used car prices are starting to come down. So if March is any indication of what the core is going to look like, by the end of the year, core inflation will be around 3%, maybe even slightly below it. That's not crazy concerning for the Fed, and that doesn't demand a massive
not at
tightening. They're a little behind the curve now, so it makes sense to play a little catch up, but I don't think you have to overdo it.
Yeah, I mean, the other thing that we are seeing, and this is what we want to see, is so that I think there's some demand slowing there too. I think we are seeing the top coming off demand in a lot of areas, but that's the whole point of this.
That's the whole point, yeah. And housing being the first and foremost of that. Higher rates are definitely slowing the turnover of the housing market. And maybe this gives us, we have a massive housing shortage, so maybe it gives us a chance to build some houses in the next year or two. And
ironically, yeah, it's one of those weird situations where we're going to have, I think we are going to have a pullback in housing, but we're not going to be sitting there stuck with oversupply, which is like what happens. The housing gets out over its skis, and then you have all these empty homes that you have to deal with, and we don't have that problem at all.
No, we have the opposite, and especially because of the pandemic, and now people can work from anywhere. You have more rural areas that didn't have housing shortages now have housing shortages.
Yeah, but so maybe it's a measured response to that demand. I mean, that we'll find a way to get it aligned. That obviously that's what we would love to see. We don't want to see wild swings in any of these markets. We already have wild swings in energy. Anything new on energy that you're seeing or thinking? One thing I'll report from talks here is that there's the leaders here are very serious about a Russia oil embargo. Question is how to do it, and they're gonna there's a how to do it, over what time period, and then what the consequences are. Who else could Russia sell to in any significant amount? Everyone just says, well, they'll just turn around and sell it to the Chinese. They'll turn around and sell it to India. And you need infrastructure to do those things. And
people don't really understand the logistics behind oil. Right. It's not like
it's not simple.
Shipping you a computer. The only thing I've heard is that apparently there is a deal in place in the EU. They're just waiting for the French presidential election, and then they'll implement it, which is a big deal. But it's also, I guess from a U.S. policy standpoint, we did a conference call with some clients yesterday, and they asked about the Green New Deal and things like that. And Democrats had all 3 houses, and they couldn't really pass anything, and that was before Ukraine and everything. So I think we're living in a carbon world for the foreseeable future, and now we have to figure out the best way to do that.
Exactly. We could start by building some pipelines and building some LNG terminals and buying some more LNG.
Exactly.
Just boats.
And that's it is an amazing opportunity for the American economy. We have it, and we can export much more. We need to invest in that infrastructure.
It's an amazing opportunity for lots of economies. There are countries like, when I say, I really mean this, but one of the things that American oil and gas companies have is not just the ability to increase production here, which obviously we can do, and it's great for U.S. balance of payments, but we also have a strategic interest in greater production in other countries in order to give choices to Europe. So we have to, we need to increase supply in other places. It all can't come from the United States. There's a huge opportunity for the United States to sell more into Europe, and it would be really, really great for the U.S. and U.S. companies. But it's not going to be enough to fill the Russia hole. And so you need countries like Nigeria and others who can have who have lots of gas, but don't have the infrastructure, the reliable infrastructure to to produce it and distribute it. And so that needs to get built. We need to see a lot more investment in those areas. And I just learned something last night. There's just really, even it's incredibly frustrating to hear. Why don't we switch to, we'll switch to the sort of international outlook. This is just one of those really frustrating things you hear, is that some of these countries like Nigeria and Angola, huge oil companies, in a period of sky high oil demand, sky high oil prices, and their production actually went down.
Yeah,
and they're making a lot more money. In fact, some of those countries have actually gone into the market and have been able to issue bonds to raise money because of the elevated oil prices. But it's mind-boggling that their production is going down and not up. It really should be going up. And so there's a lot of, that's just to say, there's a lot of runway out there in the world for, if you're sitting in Houston right now and you've got, your oil engineers and oil, you have access to a lot of oil production capital and gas production capital, there are places to invest it where you can get that oil and gas out and have places to sell it. And again, that's like, there's a strategic imperative now because we want to be able to wean Europe off of Russian gas and oil.
Yeah. I mean, it's so much of the headline discussion from the World Bank, IMF meetings has been about, central banks and raising rates. But on the energy side, is there any efforts, to kind of globally coordinate these efforts to wean the world away from Russia?
Well, they're stuck in the same dance that the Biden administration is on, and I say this as someone who, I'm worried about the climate also, and over a medium term, over near term, we're going to see reductions in greater electrification, reductions in carbon in the atmosphere, but they are just trapped in this world where they have to talk about the need to solve near term energy needs, which by definition is oil and gas. You cannot do any of the renewables in quick, you can't quick response with any of the renewables at scale. So that's only an oil and gas response. At the same time, are actively pursuing policies and recommending policies to discourage investment in oil and gas.
Yeah.
And so they sit around and wonder, why aren't they drilling more? Why aren't they pumping more today? It's like, well, because you're telling them you're going to put them out of business tomorrow. That's why. So these are, if you're an investor, why would you invest in that? And if you are a company, why would you allocate capital towards more oil and gas production? Look, people. If you think. A lot of the arguments against the Keystone Pipeline, where that's bizarre belief that Canada was not going to sell less oil, we're going to burn less oil if we don't allow the pipeline to go through the United States for them just to distribute oil. And obviously, they're more expensive. They can find other ways to distribute oil rather than through the United States. What you did, though, is you put had an enormous chilling effect on the production, on the building of oil and gas distribution infrastructure in the United States. Because why would you go take up the effort to build a pipeline to the Northeast, to your home state of Massachusetts, while New York has outlawed fracking and they're not allowing pipelines through the state? And this is, and everybody sits around and wonders, why is Massachusetts paying 3 times more than Iowa? It's well, there are a few reasons, and they don't have to do with geography. They have to do with policy. And that's what the world is looking like right now, and that's the conundrum for IMF and the World Bank and other development finance agencies and climate activists, as that these are causing very real economic and security issues. And whatever your views are on climate, you need to recognize that there are consequences for those policies, and we're seeing them play out in real time right now.
Yeah, and it's same on the inflation front. Well, while the Biden administration can't be blamed for all the inflation, a lot of that was out of their hands before. There are a huge amount of policies that we could implement or basically take away. There's a lot of tariffs that are massively inflationary that could be, with a stroke of a pen, eliminated.
Yeah, to me, that's like that's some of the biggest, easiest things that they could do. And if there was ever a time to do it, now is the time.
Exactly.
You're getting
because you actually have political cover.
You have huge political cover for it. Yeah. You have national security reasons to do it. You have domestic political reasons to do it. You have household budget reasons to do it. And then you have the thing that I would put first on my list, you have good economic reasons, to do it, right? It's like, get rid of these tariffs and lower costs for producers and consumers in the United States, and maybe take a little bite out of inflation. Even if they did away, look, I think you're right, by the way, if that inflation has probably peaked in the United States, and I really, really do hope we're
at least core. Who knows what happens with oil and gas?
But let's say that they come out in 2 weeks and say that we're going to get rid of these tariffs, and then the inflation readings are coming off the top a little bit, not enough that they're going to be low. I mean, inflation is still going to be relatively high, but if it looks like it's topped and you've done something that is tangible, then you can tell a really good story about the future and say, look, our policies are working. These efforts are taming inflation, and you should feel better about the future. And so they really need to do that as well. It's frustrating to watch.
You're right, because the Fed's supposed to be forward-looking in their outlook and decision-making. A policy change like that from the Biden administration would massively change the Fed's outlook, and also the market's outlook, and how much needs to be, how much they need to tighten to get on inflation under control.
Speaking of outlooks, we got the World Economic Outlook from IMF and the World Bank this week also, and the headline numbers are the estimated growth in 2021 was 6.1%. So fast rebound for the global economy, emerging out of COVID, and then a significant knockdown in their expectations for global growth, and mostly because of the Ukraine Russia war, but also the lockdowns in China, where they were expecting over 4% global growth in this year in 2022, somewhere in the order of 4.2%. 4.4%. So mid 4.5%, which is a great number. It's a kind of I'll just tell you my sort of like rule of thumb on global growth is if growth is above 4% globally, you're probably reducing poverty. It's like that's kind of the number that's in my head. It's like above 4% is poverty reduction, good levels of growth, however way it's distributed, and below 4% is like it's growth, but it's not the kind of mass poverty reducing growth. So they're expecting growth in both 2022, 2023 of around 3.5%, 3.6%, which again is growth, but that's significantly off where we really need to be, and with a lot of uncertainty about the future as well, because we don't know what more is going to happen. Even that estimate was made a couple, they locked in their economic assumptions weeks ago, well before some of the sanctions and some of the sanctions that are to come.
And the lockdowns probably too.
And lockdowns. Yeah. So I think even to a degree, those might even be optimistic assumptions. They have, countries like Germany, and not in recession, but I think it's a decent bet that Germany could be in recession.
Yeah, we've got some manufacturing, PMI out of Germany last night, and things are the higher cost and the supply chain issues are really slowing down, and Germany lives and dies on their manufacturing exports.
Yeah, so you're expecting recession in Germany, right? But especially if they do more on energy. I mean, it's hard to see how they.
Yeah, very simply, if they do actually, follow through on the imports from Russia, I don't see how they don't, at least temporarily slip into recession.
The uncertainty on some of these outlooks are, there are things like that, and how's Italy coping? I mean, Draghi's being, really innovative. He's actually running around the world finding ways to replace Russian oil. And the Italians signed a deal with Algeria.
Oh wow,
that's just kind of interesting. Yeah, but like, some of these. And the big question I had the other day was, the waivers for Venezuela. There are going to be, more waivers granted to allow companies to pump out of Venezuela. Look, I mean, this when you're in extremists, you find friends. Find friends wherever. Take friends wherever you can find them. The lesser evils. Friends, but it's going to be good for Iran. It's going to be good for Venezuela. It's going to be good for a lot of countries that you might have been uncomfortable with in the past. Algeria has a lot of gas, and it's on the doorstep of Europe. So
it's right there.
They should be doing a lot more. So I'll tell you the other big takeaway from this week. And if you think about the concerns that are on everyone's minds here.
Yeah, that's what I was going to ask you. What's the tone?
Yeah, maybe I'll try to I'll rank order them. One is obviously the Russia-Ukraine debacle, the Russia's war on Ukraine and all of the knock-on effects that'll have. One is the biggest knock-on, which I'll come to in a minute. But obviously with energy and what that's going to mean for growth and whether you could do enough to get Russia to change its direction. Second is China with all of these. Actually, I'm not even going to give these in order. I don't even know how to rank some of these things.
Yeah.
The next one I give you I wouldn't put even in this. It deserves to be in the middle. But China's a big one. China's going to get out, is going to eventually going to emerge out of this. But it's just such a messy, dumb own goal on their part to
which makes me think that there must be a deeper explanation, internal Nissan fighting as she kind of approaches his coronation, I guess, at the end of the year. It just doesn't make sense to lock down, especially Shanghai, where a lot of his opposition is. You just feel like there's something deeper going on there.
And there's that old saying though, like never there's an old saying that I can't get the words down exactly right, but it has something to do with, don't assume a conspiracy where incompetency is more. And so
you might be right. Yeah.
Yeah.
Because they have totally botched.
I think that's more often the case. The Chinese tend to get locked in positions on things and then they stick with them for very long.
Yeah.
But there's also this, because China has been such a successful economy, where people only see the growth and investment, like just if I heard it once, I heard it 1,000 times on their Chinese infrastructure and how brilliant it is, and there's this myth of Chinese brilliance that I think they've done a lot of really good things. The myth of Chinese brilliance was way overstated. I mean, Tell me the last time you heard anybody say something about the Belt and Road Initiative.
Yeah.
Now I'm going to take credit for saying at the time, before it, during it, and after it, that it was an enormous waste of capital that is not going to return any benefits to China, and is it's this old-fashioned try to capture friends effort on their part, and it's not going to work. It is not going to work, and it's not going to work for China. It's not going to work for the countries, and the allocation of capital is going to be wasted.
Yeah, and really, they made enemies. Anybody that took the loan and got into these projects now is not very particularly happy with it, and they really dislike China over it. Yeah.
Truly, I mean, the only countries that they can maintain friends with are authoritarian countries. And so if you have countries that are democracies, the guys you made deals with aren't there anymore in a lot of cases. Right?
Yeah. That's how.
Yeah, they're the opposition party. That's the problem with democracies. But the other issue that is of interest, and this is the one I don't rank as a high concern, because I think Macron is going to win, but like the French election is on, it's something that everyone's talking about. The fear that Marine Le Pen could pull out a win there,
Yep.
and it's not a done deal. She could pull out a win, and it would be really awful for Europe and for the French if she did. But I think Macron is going to pull that out. And then, but the biggest issue of concern is food insecurity, and by far, it's not close. It's like this is if you're thinking about the next 5 to 12 months, if you're an economic policymaker right now, you're very, very worried about what's going to happen with food security. And I would say not just for economic policy, but security policy also. We know that food insecurity leads to political insecurity frequently. If you can't eat, you don't, you find ways, you move around.
Yeah, the Arab Spring was really got going because of lack of food. Yeah.
High food prices. Yeah, exactly. So
yeah, and Egypt is heavily dependent upon Ukrainian wheat. So I would put that tops of the things that concern me. The oil and gas is a big deal, but there are actually solutions for that. If the Ukrainians can't plant the wheat, there's no easy solution for it.
Not really. I mean, it takes lead times, right? I mean, you say, well, maybe the United States can increase production. So lots of places can increase production. Argentina, United States, Australia, other countries can increase production. And if the expectations that wheat prices are going to be higher than say corn prices or whatever, we can swap out a little bit. You can do some of that to try to make up for it. But then you also have the increased transportation costs, and you also have the balance of payments problem. Is like, the ability to pay market rates. So there's a lot of thinking going on what can be done with some, combinations of food assistance, financial assistance, increased production, and to not completely write off, production from Russia and Ukraine as well. As much as we want to debilitate Russia and support Ukraine, we also don't want people going hungry everywhere too. So there's some holding your nose and moderating, some of this a little bit might end up being the case with Ukraine. Frankly, like if you can get product out of Ukraine, that's what you really want. But it makes it really difficult with the Black Sea being controlled by the Russians. Yeah. So that's the biggest, those are the biggest issues coming out of IMF World Bank week here for 2022. There's no shortage of challenging issues over the next few months, is there?
Nope, unfortunately.
Brandon, what data are we looking at going forward here?
So actually we were talking about growth. Most major economies report their first quarter GDP, basically the second estimate, which the second estimate tends to be the one that is a little closer. The first one, you don't have all the data yet, so it can be a little off. The Bank of Japan has a interest rate meeting. The yen has massively devalued in the last few weeks, and the BOJ is very much alone in terms of its dovishness compared to the other major central banks. So those will be the big ones for next week. Oh, and sorry, we also get the personal income and spending, and within that report, we get the headline and the core PCE price index. So the Fed's preferred inflation measurement.
That'll be interesting and big.
Yep.
And then the week after, we get jobs.
Exactly. Can you believe it that April's almost over?
No, I can't believe it. It's amazing.
Yeah.
All right, brother.
This is fun. Just the two of us.
Yeah, we should just do the two of us more often, I think. We get to talk more.
Exactly.
Good show. Have a fantastic weekend. I think the weather's going to cooperate.
The weather looks absolutely amazing. So get outside and enjoy it.
get to a baseball game if possible.
Actually, I just saw the tickets. The Red Sox are coming in town to the Orioles. I think it's next week, so I might have to head up there.
There you go. All right, Brendan. Have a great
weekend.
Yep. Talk to you next week.
Okay, bye.
Bye.
On the first Friday of every month, HPS analyzes the latest jobs and labor market data in a digestible format. Sign up for our reports at hamiltonplacestrategies.com or on Twitter at HPS Insight. Thank you for listening to the Macrocast. Please remember to subscribe, rate, and share.